Hi there, welcome to Kneppy Invest and welcome to July 16, 2024. We have about or just over 1 hour and 15 minutes left of trading today. It's been an intriguing day, slightly negative, but if you are a Droneshield shareholder, you might call today as a horrific day because the share price of Droneshield has fallen off a cliff. And Droneshield will feature in my top 5 stocks of the day. Now, I'm doing the top 5 stocks of the day a little bit differently than other videos because typically when I do a top 5 stocks of the day, the company has released an interesting or intriguing announcement. But two of the companies I'll be featuring in today's video in the top 5 stocks did not release an announcement today. Well, Droneshield sort of did. They released an announcement saying their shares are now in a trading halt or something like that. But the other company, Lifestyle Communities, released their announcement yesterday, and I completely forgot to talk about Lifestyle Communities. So those two companies did make it into my top 5 stocks of the day, and I've realized I'm calling it top 5 stocks of the day. So the company doesn't have to necessarily release an announcement to make it into the top 5. So I'll talk about the top 5 stocks of the day later in the video. Also, there are a few honorable mentions I want to discuss. Companies that released an interesting or intriguing announcement that did not make it in top 5. So we'll call these honorable mentions. And before we get to the honorable mentions, we'll have a look at the ASX today. Look at the best and worst performing indices, sectors, and companies. Now, before I get into the ASX today, I released a JB Hi-Fi video. Is it time to sell JB Hi-Fi? And I plan to do 2 follow-up videos, one on CBA, Commonwealth Bank of Australia, another one on Qantas. Instead of is it time to sell, I'll title these, is it time to buy either of these companies? I'll do separate videos for each. And there are a few reasons why I'm wanting to do a video on both of these companies. For CBA, it's because the price to book of the company has reached a really interesting level. And if you look at the chart, there's really good momentum behind the company. So I want to discuss whether or not CBA is a buy. And for those who know anything about me, probably know the answer already. And on Qantas, I was listening to Ausbiz Call, and one of the experts said Qantas is a buy because the P ratio of the company is 6. And I want to push back on that because I have a feeling the reason why the P ratio is 6 is because the earnings of Qantas were elevated in the last financial year, and there's a good chance that the earnings for Qantas will be significantly lower this year, which makes the P ratio a little bit elevated or a little bit suppressed, a little bit lower than what it should be. So I want to explore that hypothesis in that particular video. So look out for those 2 videos. Is it time to buy CBA? Is it time to buy Qantas? I'll release those 2 videos over the next 5 or 6 days. I actually want to record CBA either today or tomorrow, then Qantas maybe Friday or so, maybe Friday or Saturday. Okay, so let's get, and I might look at some charts as well. I haven't decided that at this point in time. So let's have a look at the ASX today. And overall, it's been a sluggish day, which is okay, because if we have a look at the XJO, we've had 3 really good days in a row. In fact, the SJO has gone from 7,825 to above 8,000. So this sort of day was always needed, or always going to happen. You could not have a run of really good days all in a row, although December last year would say otherwise. There was a really good run for almost the whole month. Anyway, so let's have a look at the ASX today. Which sectors, indices, and companies performed well? Which ones did not? If we have a look at the different sectors, real estate did really well today, up 0.54%, while on the flip side, IT, discretionary, utilities, and materials all down by more than 0.5%. Now, just based off the sectors, in the ASX 20, I would probably say that Goodman Group did well today. A few of the banks did well because financial is up slightly, while most of the mining companies had a bad day. So maybe Rio Tinto, who did release a quarterly update video, or not video, quarterly update report. Maybe BHP's down. I was going to say Woodside and Santos. Energy's flat. Utilities, yeah, discretionary down as well. IT, so maybe WiseTech's had a bad day today. Anyway, I'm just grasping at straws right now. I'm just not assuming. I'm surmising, I suppose, which companies have done well. If we look at the indices, gold's done well today, up 0.43%, while the ASX 200 resources down 0.8%. So let's have a look at the ASX 20, down 0.24%. And I'm going to say, based off that, 9 companies, no, we'll say 8 companies up, 8 companies up, 1 flat, 11 down. So 8 up, 1 flat, 11 down. 8. Oh, no, I've got that. No, sort of. No, 9. Oh, okay. 11 up, 9 down. So it's the flip from what I would have thought. When you see this, you might think the ASX 20 is up a little bit. So let's have a look at the best performing. And I'm assuming Goodman Group is at the top. Yep, at the top there. Woolworths has done well. Woodside, NAB, and Westpac, and Macquarie Group, and ANZ. What we don't see here is CBA. So let's have a look at the worst performing companies. Aristocrat, Rio Tinto, BHP, Santos, REA Group, and there's Commonwealth Bank of Australia, the worst performing back today. Fun enough, WiseTech is down. Even though tech is up, WiseTech is down. Or was that right? Am I saying that right? Let's go back. Did I have that on the flip side? Yeah, IT's down. Yeah, IT's down. Okay. Yeah, I thought for some reason I thought maybe IT was up, but it's down. Okay, so let's get to the worst and the best performing companies of July the 16th, 2024. And I have cheated today. I actually looked at the best and worst performing companies, and because DGR Global is up 222.22%, I just had to include it into the top 5 announcements of the day. That sort of price change, I'm always going to have a closer look at the company and try to understand why. Is this a breakout for the company? Because it is always a potential breakout when share price rallies like that. Another company, Addison, I really want to have a closer look at this company because I had not a close look. I had a very quick look yesterday, and the company does intrigue me. It's up another 27% today. Otherwise, down the list here, Cleanspace up 15.4%. A company that was quite close to making my top 5 announcements of the day. Very close. And there is one reason why it didn't quite make it, and I'll discuss that reason when we look at the honourable mentions, those companies that did not make it in my top 5. Let's have a look by market cap. Oh, Crisis Corporations had a good day. Metals X, a really good day. So Tin's actually doing okay, and Metals X doing okay. Callis Metals released a really good quarterly results the other day, and they're up another 6.4%. Dimerics rebounding pretty good. It's good to see. Integrated Research. It is in my top 5 stocks of the day, and it will be coming in number 1, up 12.43%. ETFs in here. It's interesting. Titomics all over the place. Highly volatile, that company, but it's moving in the right direction. And that's all she wrote for the top performing stocks today by market cap. Let's have a look at the worst performing companies today. And the worst performing company today is Droneshield. And this company did make it into my top 5. In fact, it's at number 2, down 28.46%. Now, sometimes we make bad decisions. For instance, Hub24, they did release their quarterly update today. Share price is on a run. I took profits a couple of months ago. Share price has risen since then. That was a pretty silly decision I made. Sometimes we probably should acknowledge when we make a good decision as well, just like we acknowledge when we make a bad decision, because we learn from the bad decisions. But sometimes we learn from our good decisions. And Droneshield is a good decision on my part. So I mentioned Droneshield yesterday, and I thought the chart looked, or the one-day candlestick looked interesting. And someone actually did mention to me, now, what I'm going to do is I'm going to talk about Droneshield when we get to the top 5 stocks a day. But sometimes we make a good decision. And I actually did take profits in Droneshield yesterday afternoon. And for a while yesterday afternoon, and even this morning, I thought it was a mistake. And now I'm not thinking it's a mistake at all. Another company what happened there? Another company that I did talk about very briefly yesterday, Moshio, down 22.7%. I suppose that is just because the share price rallied a fair bit yesterday. AML 3D received their second aware query from the ASX Not surprised, the share price is down 15.8%. They received that particular query at about midday. FBR, I'm assuming that is a bit of profit taking, down 13.8%. Probably the same with Aurora Labs. And that's probably all I want to talk about right now. Let's have a look by market cap. And of course, Droneshield is going to be at the top there. Adriatic Metals, what's happening there? I want to have a look at the chart for that company. It's a silver company in the Baltic area. I think it could be in Croatia. Share price has absolutely plunged the last few weeks. I'm not sure what's happening there. And otherwise, nothing else here. There's a few other companies here that interest me, including Clearview and Counter, but that's a different story. And AI Media Technology is down a little bit today. The share price of that company had rallied a fair bit, like I think it was last week. Okay, so that's the best and worst performing sectors, indices, and also companies. Now let's have a look at the announcements of the day, including the top 5 stocks of the day, which we'll get to towards the end of the video. I just want to point out some of the companies that did not make it into the top 5. All these companies released announcements today. The first 3 are mining companies who released their quarterly reports. We're talking about Cooper Energy, share price flat, released their quarterly report. Rio Tinto released their quarterly report, down 2.2%. And also AIC Mines released their quarterly report, down a little bit. The only time I get a little bit excited about mining quarterly reports is when there's a sizable reaction from the market, like Callus Metals. That was a sizable reaction. For instance, let's have a look at Callus Metals, and you'll be able to see that just by looking at the chart. They released their quarterly report last week, so it would have been on the 10th of July, and the share price has just taken off. So the market loved that. The reactions from these 3 companies fairly muted in comparison. So let's have a look at quickly have a look at the charts for these 3 companies, starting with Rio Tinto. And when I look at this particular chart, does absolutely nothing for me. In fact, the only reason it might do something for me is the share price has fallen a fair bit from the highs. So it's gone from $136 to $117, but still well off the lows you could see. That's about $104. So it seems like it is trading in a bit of a channel right now. So no interest in Rio Tinto. Cooper Energy, no idea what this chart is going to show me. This is much better. Share price is now in an uptrend, although share price has been going sideways for about 4 months. Needs to break out. So this one is also trading in a channel. Only a 4-month channel, but still there. So I want to see the share price get above 24 cents before I'm confident the share price is now in an uptrend. And the other one was AIC. I think it's A1M. AIC Mines, A1M. And this one has been volatile, hasn't it? Oh, beautiful chart. A really deep pullback. And it looks like the pullback moved into the nice little support zone and has been trying to rally again. Volume has been slipping away over the past 2 months. That's not that concerning just yet, but I'd like to see the share price rallying on increasing volume. Okay, so those are the 3 mining companies that released their quarterly reports today. Otherwise, Pioneer Credit released a sort of interesting announcement. It's interesting for me because I'm now a shareholder of this company, trading Pioneer Credit. Financial year 24 pre-results roadshow, unaudited cash numbers. Whenever I'm holding a position in the company and I see this sort of announcement, I'm just hoping it's not bad. It's not, and this announcement was not bad. And in my opinion, when you do hold a company whose chart looks like this, the chances are greatly decreased that the announcement will disappoint. This is a nice looking chart for Pioneer Credit. And the main reason I've taken a trading position in this company is because of the chart and because I think this company is definitely considered to be cheap. I definitely could argue it is cheap right now. Another company that released an interesting announcement today was, well, maybe not that intriguing, Hub24. They also released their market update. Share price has done nothing today. Another good quarter for Hub24. And this is the mistake I made. I took my profits with Hub24. And you got to own up to your mistakes. You got to sort of learn from your mistakes. And this is one of the mistakes I have made, which I have learned from. So taking profits in Hub 24, I took a position in Hub 24 back in August last year. Beautiful breakout. And in fact, the one probably criticism of my purchase then is I didn't wait for any pullback. And there was a really good pullback, hit the support or the breakout level, and then took off. And there's not, look at this chart, there was no reason for me to set out and take profits. None, no reason, but I did it. And the share price has remained in a beautiful uptrend. And looking at their market update, no complaints with me. I'd say there's no complaints from the market anyway. I think this decrease in price is just a bit of noise. Now we get into the interesting space. So Hub 24 never had a chance of making it into top 5 announcements of the day because it's a market update from a company that is expected to release a really good update. So no surprises here. That's why the share price has not really reacted. Now we get to a few companies that had a shot to get into the top 5 announcements of the day and just fell short for no fault of their own, but there are a few reasons why these companies do not make it. And the main reason is because of the chart, except for one company. And I'll talk about that company in a second. So Compumedics will release a really interesting announcement, a business update. And I like this business update from Compumedics. It was good. And just the wording and the numbers. So record sales orders received approximately 52 million. Record revenues booked of approximately 49 million. Full-year profitability will be achieved on the back of record revenue performance. I like it. I think this is really good. And they also, I suppose I don't have to really talk about that. They're releasing their results on the 26th of August. My only complaint about Compumedics, and I did like the announcement, my only complaints about this company is the chart. Now, when I say complaint, the share price of this company was in a long-term downtrend. Share price fell from about $96 just prior to COVID-19 financial banning, all the way down to about $14 in 2023. That would have been March, April 2023. Definitely the sentiment in this company has turned from negative to positive. But as it has turned from negative to positive, we've seen a lot of volatility. Well, what's happened there? I accidentally pressed a button. And yeah, we've seen an increase in volatility. Share price went from 14 cents all the way to a high of 44 cents in about a month, and all the way back down to 22 cents in about 2 months. So share price halved with no really sneaker news flow from the company. Share price has started to rebound again from $22 up to $36. The other day, the share price fell about 14% on no news again, fairly low volume. And to be honest with you, if we didn't see this massive bounce to 44 cents, if the share price just was more ordered in the increase, it was more general, sort of going up much more slowly than this would have been and could have been a breakout for Compumedics. So the whole reason I go through this process is I'm looking for breakouts. And one of my definitions for a breakout is share price must be at least a 3-month high. The reason I want at least a 3-month high, I do prefer 6 month, even better is a 1-year high, is because of resistance. Shareholders who bought in the last 3 months and saw the share price drop after they bought, and they always consider it to be a dog stock if that happens, and they need to sell out. That's resistance. So if this was a 3-month, 6-month high, I think this could be a breakout. But alas, it's not. Hence why it did not make it into my top 5 announcements of the day, even though I actually did like it. So congratulations to Compumedics and their stuff. Another company released a trading update or something like that. Cleanspace, sales update, up 15.4%. This could be the turnaround for this company. Now, this was a COVID-19 story. This company listed in mid-2020. The market cap of this company reached about $600 million. Share price, if I remember correctly, was something like $4.50 to $5 at its peak. And the revenues of this company were like $40 million in a half year. And this company was highly profitable because of COVID-19. They sell respiratory equipment, I believe. Cleanspace is a designer and manufacturer of respiratory protection equipment for industrial and healthcare. So you can just say by respiratory protection equipment, the equipment this company was providing for hospitals was in high demand during COVID-19, so 2020 into 2021. But when those tailwinds came to an end, this company was facing significant headwinds and the revenues just dropped like a rock. Hence, the share price dropped like a rock. Share price dropped from $4.50 to something like 10 cents, 10 to 15 cents. But things look like they're turning around. And you get that sense just by looking at this particular announcement. So revenue for this particular financial year has grown 30% from last year. They also mentioned here, which is something quite important, revenue has now grown every half year sequentially over the last 4 half-year periods. So 4 half years in a row where revenue has grown. In fact, let's have a look. CSX. So this is FinChat. In fact, you can look at the markup of the company. So this markup of Cleanspace reached a peak of almost $600 million in early 2021, and then it dropped significantly. Now it's $20 million according to this. But if we just have a look at the revenue, in fact, I'm going to have a look at the semi-annual revenue, so we can just break it down. This is the company's semi-annual revenue, up to $39.7 million in December 2020, and then dropped all the way down to $5.7 million. But we have seen increases from 5.7 million to 6.4 million to 7.3 million in the first half of this financial year. And based off the numbers, so they're expecting $15.7 million of revenue, minus 7.3 from that. So $8.4 million of revenue in the second half of this financial year. So nice increases in revenue the last 4 half years. So there is potential. This company is turning around. Now, no mention of profit. That's the one thing, probably one of the negative things about this. They're just talking about revenue growth. I want to see profitability and cash flow. So Cleanspace is not quite there just yet. And the chart is not quite there just yet either. Chart looks meh. Now, interesting enough, share price in long-term downtrend, or was in long-term downtrend, got as high as $7.50. Well, I was way off. What did I say, $4.50? Share price got as high as almost $8 back in early 2021. Now it's 30 cents. And the low in the share price was 15 cents. What is interesting about this chart is there was the beginning of a nice consolidation period here. Beautiful consolidation period. There was a little bit of a dip in the share price back from May into June. If there wasn't that dip, and if the company released this particular positive trading update without that dip, say the share price was about 35 cents before this announcement, I think this could be a breakout. This could have been a breakout. It just shows you the importance of resistance. So there was or would be a fair few shareholders who bought at higher prices in the past year, say between 30 and 35 cents. And those are resistance. Those are shareholders who want to sell out. They might not be as enthusiastic to sell out as anyone who bought back here, but more than likely, any shareholder who bought back here at $7, they're already out. They could have sold this company as a tax loss at the end of the financial year. So I don't think there's many shareholders who bought at much significant higher prices, but it's still resistance. So it's Cleanspace, close to getting into top 5, but not quite there. The next company is actually, no, I'll talk about Spirit Technology first. This is another company where they released an interesting announcement, trading update. They announced in this particular trading update, they are underlying EBITDA positive, nice growth in revenue. Things are moving in the right direction for this company. Now, there are low margins, and the one thing holding me back from this company is the chart, just like the other two companies, like Cleanspace and Compumedics. So if you look at the chart for Spirit Technology, share price had been in a downtrend. In fact, if you look at this particular chart, looks like the share price has been going sideways for about 2 years. There's been a little bit of volatility in there, but not a lot. And the share price right now at 5 cents. If you go all the way back to May 22, the share price hit 5 cents. And just like some of the other companies here, if there wasn't this massive rise in share price back in December, January, if there wasn't that little bit of a hype period, this could be on the verge of a breakout for this company. So a good result, but again, just not quite there, calling this a breakout for Spirit Technology. Now, on the flip side, the other company that released an interesting, intriguing announcement is RAS Technology, which is racing and sports. They provide stuff for betting agencies, that sort of thing. Record financial year 24 driven by strong revenue growth and deal progress. So this company provides stuff for betting agencies. What sort of stuff? provider of fully integrated premium data and enhanced content to the global racing and wagering industries. So some nice numbers in here talking about annualized monthly recurring revenue and all that jazz. Expects full year revenue of about 16.1 million, growth of 38%. Again, they're not talking about profitability and that sort of thing, which is probably okay. They're experiencing growth. Now, the one difference between this company and the other three I've just mentioned is the chart for RAS Technology is much better. And I don't mind this chart. The share price was in a beautiful uptrend. There was a little bit of a dip here from April into June. Share price has bounced off about $1.04 up to $1.30. But probably the one thing is just the market reaction. There hasn't been a noticeable reaction today, so only up 1.56%. So if the share price was up 10% with this sort of chart, I would have been paying way more attention, and this company would have made it into my top 5. So it's just the market reaction today. That's the only thing holding me back from for this company making it in the top 5. Okay, so those are the honorable mentions. Now let's have a look at the top 5 announcements of the day. We'll start off with that company that has seen a 233% rise in share price, DGR Global. Now, this is in regards to an investment the company has made. And this is not necessarily a mining exploring company. This is sort of an mining investing company. Is that the best way to describe it? So this company does own a few investments in other mining companies. And one of those mining companies is another company called Sol Gold, which is listed on the London Stock Exchange. They have a market cap of 250 million. And this particular company, DGR, has 6.6% stake in Sol Gold. Interesting enough, on this particular announcement today, which was made by Sol Gold overnight on London, share price of Sol Gold rallied 20%. So there has been a little bit of difference between the rally in Sol Gold and the rally in DGR. In fact, DGR's market cap, let's have a look at the gainers. DGR's market cap is about $29 million. So if they own 6.6% of Sol Gold, and Sol Gold has a market cap of 250, if I remember correctly, I could be wrong here. I'm just going to have a look. Sol Gold, London Stock Exchange, market cap of 264. So 6.6% of 264. Who's good at mathematics? So I'm assuming 6.6% of 264. So we're talking about $16 million. So about $16 million. So that's just guarantee. This is just a 0.66, 16 million, 17.4 million. So that is how much DGR owns in Sol Gold right now. 17.4 million. That's their value of their investment in Sol Gold. And don't forget, the market cap of this company is 30 million. But this is not the only investment the company has made. They've made quite a few other investments. And by the way, this announcement is in regards to a financing package. Was a $750 million financing package, which de-risks this particular project, even though they do have to spend a lot. 1.55 billion on capital expenditure, but the NPV is 3.28 billion or 3.2 billion US dollars, and after-tax rate of return of 24% in Sol Gold's March 2024 PFS. But what was intriguing about me in regards to DGR is their other investments. I have never had a close look at this company, but if you open up their Appendix 4C they released in April, they show you their investments. They tell you about it. So what do they call themselves, I wonder? DGR is not just another resources company. DGR Global is a resource company creator. Our project generation, strategic tenure acquisition, corporate development, and investment capabilities provide investors diversity across several different commodities, sovereign jurisdictions, and international financial exchanges. And they do mention all their investments in this. Here they are. So these are their investments. So there's that it says 6.8% Sol Gold, 1.87% in Atlantic Lithium, 12.6% in Clara Resources, 8% in New Peak Metals, which has a 16.8% stake in Lakes Blue Energy, 100% DGR Energy, 83.2% in Armour Energy, and there's a few others here too. Auburn Resources, Hearts Rare Earths, Kulgara, Pinnacle Gold. This company has a lot going on right now. And the only negative thing about this company, in my opinion, is just the lack of cash flow. If one of these particular, and go through this announcement if you like what you're hearing here, and have a look at all these other companies, because I think you do need to know a little bit about these other companies. I just noticed here, Clara Resources, C7A, share price rose significantly the other day. So this company should have seen their share price rise the other day. So down 10.5%, but Clara Resources share price rose 54.6% on the 11th of July. So that's interesting enough. Interesting right there. But the one negative thing about DGR is the lack of cash flow. So cash receipts was $2,000 in the quarter, $77,000 for the first 9 months of the year. But I do implore you, go through this particular announcement released in April, or maybe wait for their June quarter Appendix 5B or whatever it's called. In fact, was this called a 4C? Let's go back to DGR. I'm just gonna, don't think it would, yeah. No, it's a 5B, yeah. I was gonna say, it wouldn't have been a 4C, it would be a 5B, because it's a mining company. Well, it's mining investment, I don't know. In fact, let's have a look what they about. Do they have an about section here? Do they have an about section? No, they don't. But yeah, no, I think I've explained what this company does enough. Okay, so let's have a look at the chart. That's the last thing I want to have a look at is the chart. Is this a breakout for DGR? By the way, if you have a look at Sol Gold, that's burgeoning on a breakout, I think. Yeah, ooh, it's getting close to a breakout. Oh, it's very close. So let's have a look at DGR. Is this similar to Sol Gold? And the answer to that is no. No. Massive volume coming in, and definitely I want to pay close attention to how this company performs. We saw another big day. This company had another big day on the 7th of October 2022. Share price rose 42%, and it did nothing after that. Now, it does look like this company is illiquidly traded at times, just based off the timing of the what do you call the bottom thingy here? What do you call that? Does look like there's gaps. So there's probably some days here where this company is not traded, and the liquidity today or the volume today probably suggests maybe there's going to be an increase in volume. So this is a good day for the company. However, I wouldn't necessarily call this a breakout just yet. It's getting close. So I'm going to pay close attention to how this company performs over the next few days, even the next few weeks. So that's coming in at number 5. We have DGR Global. Coming in number 4. I forgot how to count. Coming in number 4, we have Electro Optic Systems, up 6.8% on announcement where they've told the market they've increased first half revenue by 92%. Now, they also mentioned in this announcement, I think this is very important when it comes to this company, given the lumpy nature of EOS revenue, quarterly figures should not be used to imply full-year estimates. I think it's very important. This company will have lumpy revenue. Now, the other thing to note is the cash on hand actually didn't increase. I think they did repay some debt. Cash position, here it is. So an orderly cash position was 52.2 million. This sort of company, cash is very important because they are capital. They need a lot of money to build the equipment. So capital, what's the word? Not capital light, capital intensive. That's the word, capital intensive. This compares to a cash balance of 72.4 million at the 31st of March and follows the previously announced repayment of 20.5. So if you add 20.5 to 72.2, the cash on hand grew minusculely. So if you forget that repayment of that debt, it went from 72.7 million to 72.4 million. In fact, it fell. It fell a little bit. But again, nothing to be concerned about at all. So the main reason why Electro Optics made it into this particular top 5 is simply the chart. We are looking for breakouts or potential breakouts. Now, I have been training this company and I do own a longer term position in this company, not trading Electro Optics right now, but the chart is starting to look a little bit better. On this particular day, it's sort of like a fight between the bears and the bulls. Even though share price is up, we haven't seen the best looking one-day candlestick, which is like one of these long green bodies. In fact, it's red, which means the share price has dropped during the day from its open. But the share price did rally. In fact, it did fall all the way down to below the share price yesterday or close. The closing share price yesterday. At one point today, the share price fell below that. Let's have a look at the 5-minute chart. Oh, this is it. In the first hour, a lot of volatility. Share price went up to $1.79, and then in the next 20 minutes, the share price fell all the way down to $1.60. So a lot of volatility in that first 20 to maybe hour of trading, but now the share price has found a nice little base at a rise of 6%. If you have a look at the 1 hourly chart, if you're doing more of a short term, share price or this particular chart, 1 hour chart, looks pretty good right now. So this is the main reason why Electro Optics has made it in the top 5 announcements of the day at number 4. Coming in number 3, we have a company that released something yesterday. Share price has rallied today. And this particular announcement yesterday was response to media. A lot of times response to media could be a good thing. It could be a potential takeover or a takeover rumors. This was not that. This was negative. So Board of Lifestyle Communities advises that is aware of media coverage aired by the ABC today. Coverage includes references to allegations made by some homeowners at one of our communities at Woolart in northwest Melbourne. So this is not positive at all. So they reject the allegations made in the VCAT applications. It would offend them accordingly. Anyway, so not good news. Some rumors going around. Not sure how this is going to play out. No idea. But the market hates uncertainty. The market hates risk. And this is an added risk to lifestyle communities. We just have no idea how this is going to play out. Not even sure what these allegations are. You could just Google it, I suppose. Google it. Let's do that right now. News for lifestyle communities. Loses 18% over fees concerns. Lifestyle communities promise retirees affordable resort style living, but some say they're a financial prison. Okay, so we're getting sort of the gist of what they're complaining about right here. The lifestyle villages people can't escape. Nasty. Sounds nasty, doesn't it? But again, the main thing here is the market doesn't like risk, and this is an increased risk or an added risk to lifestyle communities. Now, on top of that, the chart before even this particular day looked horrific. This is not the sort of chart you want to be invested in. So the share price of lifestyle communities has been a downtrend since February of last year. 23rd of February, actually, that's this year, isn't it? Oh, that's a 1 hourly chart. So the 1 hour, you can trade 1 hourly. Look at that. You've got a sell signal on the 23rd of February at about $15, and you've done fairly well if you took that signal. But let's go to the daily chart. So share price has been a downtrend since that February day, but even before that, share price was doing nothing. Nothing too exciting. This was a market darling up until 2021. Beautiful uptrend, but the share price right now, or the chart right now, is in a downtrend, a pretty significant downtrend as we speak. Even though share prices rallied today, not a reason, in my opinion, to get excited. We just don't know how this is going to play. And I'm a little bit more risk averse when it comes to these situations when I see a chart like this. And to be honest with you, when I see a chart like this, I would ask myself, why do I have an investment in this company right now? Unless it's a high quality company. And if it's a high quality company, when you see a share price drop like this, it could be an opportunity to buy high quality company at better valuation. So that's a question you have to ask yourself. Is Lifestyle Communities a high quality company? I don't necessarily like companies like this. So I have never done research on lifestyle communities, but I just don't like property, really don't like property. And I just, for some reason, just don't like companies like this. So I've never had an interest in buying lifestyle communities, but we're all different. And if you do think this is a high quality company with just a bit of a short term issue, this could be good valuations. this could be a good time to maybe add to your position or take an initial position in lifestyle communities. But the chart looks pretty horrendous. I'll be honest with you there. Coming in at number 2, we have Droneshield. Share price down 23.85%. Okay, they did receive a price query. I was wondering about that. Share price was down as much as 30% today. So let's have a look at their price query. I'm glad they released this. Okay, so I was concerned that there could have been some information that they had not released, and that would have been pretty bad. Okay, so no. Answer to 1 is no. So they haven't released any information that was there was an article today. Capital Brief, short sellers circle Droneshield. Okay, I'd say that's the reason why. This is the reason why the share price has dropped today. Possibly, but that was released at 5 a.m. this morning. Yeah, that's at 5 a.m. this morning. And I'm going to show you the chart for Droneshield. There's been a little bit of a nice little rally, so a little bit of a decrease in risk. People thought, oh no, share price is dropping, something's happening. They're going to release a really bad announcement. And when they release this particular query, the nervous Nellies are saying, oh, it wasn't that bad. Nothing's bad. They haven't, insiders are not selling, that sort of thing. But something definitely happened to this company at midday. And you can see that looking at the 5-minute chart. By the way, the one-day chart is horrendous. This is the worst looking chart you'll ever see. We have seen a little bit of a nice little rally right now, but this is definitely not what you want to see. But to be honest with you, it's understandable. And yesterday's one-day candlestick was an exhaustion gap. The reason I know that is because I mentioned in yesterday's video. So I mentioned the chart looked, I forget what I said, but there was a name for that one-day candlestick. You can see there was a gap, and it was a really good one-day candlestick, but there was a gap. The one little thing, there was okay volume yesterday, but thanking Jason Nimmo, no, it wasn't that one. Oh yeah, there it is. Droneshield is in its Wave 3 excess phase. They call this gap an exhaustion gap. It can be confirmed by the RSI being in the overweight area above 70. And there's me replying at about 10 a.m. or so. Thank you, exhaustion gap. I took profits on Droneshield because it looks just way overbought. I took profits yesterday afternoon, just before closing. Share price rose after I sold. Share price rose on open. And I thought, oh, gee, this was a mistake. I probably should have taken profits. I did not sell completely, but I did take profits. And exhaustion gaps. Exhaustion, and this is exactly what it looks like. Yep, exhaustion gaps, images. What's a good one here? I suppose the Investopedia is pretty good. An exhaustion gap is a technical signal marked by a break lower in prices, usually on a daily chart, that occurs after a rapid rise in the stock's price over several weeks before. And here it is. So this is the exhaustion gap I was referring to, something like that. No, it's different. This is different. That's not what I'm thinking. See, this one here is different. This is what I'm thinking exhaustion gap is. Right here. You get a really good run up in share price, and then there's a gap. So they're calling this exhaustion gap. So I have this wrong. So this is not an exhaustion gap. This is not what I was talking about. There is a word for this. So maybe this is a little bit wrong. I don't know. I'm not the biggest expert in these these gaps and those sort of things. So anyway, I could be a little bit wrong, but I do know it's a thing. When you see a rapid rise in share price and then it gaps up like this on no news flow, but typically you do want a little bit lower volume, that could be a sign that things are starting to turn, or the share price is starting to reach a top, and you're going to expect or should expect the share price to pull back and possibly pull back significantly. And we've seen that today. But the interesting thing about Droneshield today was a 5-minute chart. This is a 5-minute chart. So the share price opened at $2.72, which was up about 5% from yesterday's close. And I saw that and went, oh, I've made a mistake here. I sold out a little bit too early. But then we saw the selling in that first 10, 15 minutes. Share price then went sideways. And then right on midday, we saw the selling. Right on midday. So I just think something was released at midday. Could have been a short report. It could be a sell from a broker or something, because the share price just plunged right on midday. Something happened at midday. I'm still saying it. Something happened in midday. I don't know what happened yet, but the selling started right on midday, which is a telltale sign. Anyway, share price dropped from $2.50 or so all the way down to a low of $1.80. And look at the volume as well. Massive volume coming in. And there was a little dry up in volume just before that. After the opening, there was a big volume increase on open, and then a dip in volume, and then a massive increase in volume when the share price started to drop. Anyway, so I'm glad I took profits. Question now is, do I now buy back in? I don't know. And what I might use is just a 1 hourly chart. So the 1 hourly chart, yeah, it's a couple of big down hours in a row. I don't know. No idea just yet, but I would expect, based off this, that we could be at a low right now with Droneshield. Look at that, share price up to 213 as I speak. So we are seeing a rally in the share price within the last 5 or so minutes. There we go. So that's coming in. And number 2 is Droneshield. Coming in number 1, Integrated Research. Share price, it's only up 8.9%. Share price got as high as 98 cents today. So we have seen a little bit of selling, but it's not a big amount of selling. And the company released a trading update. Financial year 24 update and CEO transition. And everything's going along swimmingly well for the company. That's what I took away from this. Nothing to be concerned about. Cash or bank at 31.9 million, up 72% from previous corresponding period. That's exactly what you want to see. EBITDA, a nice 100% increase from last year. Pro forma revenue down a little bit. So that's the one slight negative, but everything else is positive. So the share price did rally on this news. So a little bit of a dip in, a little bit of selling towards the end of the day. That's okay. So this is the 1 hour chart. You look at the daily chart. Yeah, the chart looks spectacular. It's still looking spectacular. We're getting these opportunities to buy the dip. We've had now 2. One back in early June, one in early July. And the share price today has reached an all-time high. Not an all-time high, because if you look at the weekly chart, share price was significantly higher back before 2022, a long-term high. So last time share price got to $1 was in its downtrend, and that was in early 2022, so over 2 years ago. So that's coming in, and number 1 is Integrated Research. And maybe I'm a little bit biased because at this point in time, this is my largest trade. This is my biggest trade. Okay. I was going to show you a few charts. Exhaustion gap. There could be another one. Gap at the top of a rally. Gap at top of rally. Well, okay. Okay. I understand why market rally. Now, here you go. So this one here got the exhaustion gap when it's still rising, which I thought it was. But the other 2 images I saw, the gap was, and this one here too as well, exhaustion gap at the top, signifying the top of the rally. And the other 2 images we saw, that was actually, the gap was when the share prices started to move down. Okay, so that's interesting. So you're getting different definitions here. Breakaway gap, continuation gap, a lot of gaps. Anyway, that's all I have in regards to the top 5 stocks of the day. I was going to show you a few charts. So let's have a look at a few charts, I suppose. FBR, is this a buy the dip situation? I'm going to look at the hourly charts for these. Is this a buy the dip situation for FBR? Possibly. This is probably the biggest dip we've seen since the share price started rising. And we have seen the share price move into this nice support zone. And there is a little bit of buying coming in right now for FBR. Adriatic, share price has plunged. What's happening here? There must have been some news from this company because the share price has dropped 11% today. And if you look at the hourly chart, yeah, the share price has just plunged. I'm going to have a look. I don't think the company released anything today. I don't remember the company released anything today. Oh, there you go. Constitutional Court release update. Was marked non-price sensitive. Oh, this could be it. This could be the reason why. Adriatic Metals notes that the press release from the Constitutional Court of Bosnia and Herzegovina saying the federal BIH law permitting the removal of state forests for temporary use should be repealed, as the competent authority should be the state rather than the federation. Adriatic will review this full decision of the court when it is published to assess what impact, if any, this may have on future operations at the Varas Silver project. Operations are continuing as planned, with the production ramp up on schedule for fourth quarter 2024. So this could be the reason why Adriatic share price has dropped today. Possible overreaction for the market, but again, the market does not like risk. Okay, that's all I'm going to have for today's video. If you have any thoughts, any questions, anything at all, leave it in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.